Hey folks, Dan Frio here with your market update for April 2nd, 2024. So in today's video, I'm going to go over, can the Federal Reserve actually pull off a soft landing? A soft landing, what is a soft landing everybody's talking about? That's what the number one thing we're going to talk about. And then at the latter part of this video, I'm going to go over to and show you guys if there was a housing crash, how much I would be affected. Because people are like, Dan, you pump FOMO and housing and everything else because you want house prices to keep going up and up and up because that's your business. Well, you might be a little surprised on my answer on this one. So without further ado, let's get over to today's report. Why you're here is these. What's going on with mortgage rates? Look where mortgage rates went on the 30-year fix. It went up 1/8% yesterday. Why? What happened? Well, Friday we had the PCE number come in. That's the number one inflation number that the Federal Reserve monitors. It went up a tenth. And that's what happened. Remember I said, if the numbers don't come in line, you're going to see mortgage rates either going really good or spiking up. Same with the stock market. So you saw the stock market sell off yesterday over 300 points just on this number alone. This is the PCE. This is the number how it's been coming in over the last few months. People were expecting this number to continue to drop and drop and drop. Look at November. We had a PCE of 2.7. December, 2.6. January, 2.4, going in the right direction. All of a sudden in February, we hit 2.5, a tenth higher than was expected. What happened? Dow Jones down 300, mortgage rates spiked over that minuscule of a transition. So that's what we're going to really talk about. We're going to give you other pieces of this puzzle here in 1 second. But the economic data for today is the only thing out right now, or we're waiting for, is the JOLT index, how many job openings there are. I'm not too concerned about that piece of the puzzle right now. What I'm concerned about is the Federal Reserve going to pull off a soft landing? So what is a soft landing? It's basically when the Federal Reserve brings down inflation from where we were at 9 to where we are right now, about 3, and without pushing us into a recession. Okay, a recession, we don't want a recession. I know people put the comments down below. I hope we have 20 rate increases and a recession and all this. Guys, you don't want a recession to happen because it's not good for our economy. You might lose your job, and it's just nothing but bad news. So let's go in. Let's take basically a snapshot of the whole economy to figure out, are we going to pull off that soft landing, or what actually is going to happen? Well, the first thing I look at is corporate profits. Why? Well, this is the lifeblood of basically our whole economy. If companies are making money, that means they can hire, they can pay, they can expand, and everything else. So here's where corporate profits have been over the last 10 years. Look at this. Here's the weird thing. I won't say weird, but here's the anomaly between this. See how corporate profits were just steady. And then all of a sudden right here, what happened in 2020? COVID, the pandemic. So how did companies basically shut down, but their profit margins just spiked? Look at this. Profit margins were what, 1 point something down here? And then they basically doubled up to here. So corporate profits are going real well right now, as you can see with the Dow Jones and the S&P hitting records on a daily basis. The next thing we want to look at is the unemployment rate. This is the things that the Federal Reserve monitors. Unemployment rate would happen again during COVID. It spiked to the highest level basically in history. Then we came back, and where are we now? Basically at historic low levels on the unemployment rate. So that means people are working and companies are hiring because they have the profits. Next thing is disposable income. Now here's where people are telling you people are running out of money, delinquencies are running rampant, and the whole world's going to collapse again. Well, here's the disposable income chart for consumers, me and you, how much money we have in the bank. See how this was steadily increasing. What happened again here? COVID, pandemic, profits or people's consumer disposable income spiked to the highest level, and it continues to rally up. Okay, so what you're seeing here is people do have money. Okay, and they're spending it. And that's, again, another reason why you're seeing the stock market going up and up and up. So now let's look at the delinquency rates. People are saying, okay, everybody and their mother's going to lose their homes because everybody's going to go into foreclosure. Well, let's look at the foreclosure rates that we're seeing. Right now in January of 2024, it's identical to where we were last year. So there's no change there. If you go through here and look at it state by state, just take a top snapshot of the top 6 states. We have Louisiana coming in at the highest level at 5.6. It's up 0.1. Okay, so these are the highest leveled states, and here's the net effect month over month or annual change. You don't see a huge rally there, folks. Okay, so you're not seeing a huge delinquency in mortgages causing a whole flood of houses to the market. So let's recap it. What's a soft landing? Well, when the Federal Reserve can pull this off, corporate profits are up. Unemployment rate is down, disposable income is up, and delinquencies on mortgages are basically at one of the lowest levels we've seen in history. Now, what I want to talk to you guys about is what would happen? What would happen if the housing market completely crashed? And you're like, Dan, you'd be out of business. I wouldn't be out of business. Okay, let me explain to you. When the housing crash occurred back in 2008 through 2010, what happened? Well, mortgage companies, the housing market took a bloodbath for about 2 years. And then what happened? There was FOMO. House prices dropped to levels everybody can afford at that point. Everybody was buying. So how we make money, realtors make money, banks make money, is on transactions. Last year, we saw the lowest transactions in, I think, history when it comes to housing. It's a terrible time for us, okay? But what happens is, if there was a 25% housing crash, I'm okay with it. What would happen is it would make housing much more affordable for everybody. People would jump into the market. There'd be FOMO and people would be buying and buying and buying. And how do we make money? Again, transactions. Okay, so as long as there's multiple transactions, so would I be okay with a housing crash? Yeah, for my business. But do I think it's really going to happen? No. Why? Well, we just went over. The economy's not bad, folks. We're getting into basically a soft landing. There are going to be some hiccups. But the thing is how do you get a crash? You get a crash when there is no demand for something. Okay, it's like a stock. Why does a stock drop in value? People don't want it. So they sell it or don't buy it. So you don't have any demand for it. It brings down the price to a level somebody wants to pay. It's the same thing that happened in the housing market in 2008. People were losing their houses. Prices kept coming down and down and down, and then you had FOMO. It came in, and everybody and their mother bought homes, and that's what's happened. So I would kind of thrive if we had a housing crash, but I'm not predicting a housing crash, guys, because the tea leaves don't line up. So that's my report for today. So let's go over to see where the bond market's reacting to basically no news. Let's see if the JOLT index came out yet. Not out yet. So what's the bond market doing? It's having a feeding frenzy still from the PCE number that came out. Again, remember last week, the PCE number came out on Friday. This is the #1 inflation gauge that the Federal Reserve monitors. We missed it by 1/10. And the market sold off dramatically, and the pain continues to come in. So what we're seeing right through here, we're going to see mortgage rates go up a little bit more, probably 0.05. That is going to bring us to about 7.1 to 7.125 is where I'm expecting mortgage rates to be today. Where is it going to go from here? Watch me every day, and I'm going to tell you what's going to happen each individually day. So if you're out there and you're a realtor or maybe a mortgage loan officer, or you're out there in the market trying to figure out when should you buy, how should you buy, what programs are available, I'd love to have you as a subscriber to my channel. Don't forget to subscribe down below. But if you want to reach out to us to say, Dan, how can you help me? I'm a mortgage loan officer. I'm actually a mortgage broker, licensed in all 50 states as well as Puerto Rico, and I'd love to help you. How do you reach out to us to get our help? We'll go to therateupdate.com. Here's our website right through here. If you want to reach out to us to get a pre-approved for a loan, or you want to just kick the tires to see, do you qualify? You got enough income, you got good credit, maybe you don't have the money for a down payment. We can help you there. Maybe you just need some guidance in this. We'd love to help you. So the first step is hit the apply now button right up through there. It's going to launch you down our avenue for your application. But if you're out there and you're like, Dan, I can't set up an appointment for about a week or two. I know, guys, we're trying to get to it. But if you want, go ahead and just give us a call. You can give us a call. Here's the number right through here. We'd love to assist you. You don't have to wait a week or two for your consultation. Please give us a call. We'd love to help you immediately. You can reach us at 844-775-LOAN, or you can email me directly at dan@therateupdate.com. So thanks so much for watching. I hope you were a little bit maybe surprised on my answer to, if the housing market crashes, how do I feel about it? So thanks so much for watching, guys. God bless. See you tomorrow.